You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 18th day of October, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. And there go the phones. All right. Let me put up a chart of the S&P 500 Emini Futures. Let's go with a daily chart. There we go. All right. Now, if you can't see the chart, go to our homepage at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. On the days that you're out of the office, away from the desktop, just grab a browser, any browser, and point it to youtube.com/CFRN/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Now, we had a hiccup with the live page on the Emini Training School site, so I'm working that out. Starting next week, if you're away from the office, away from the desktop, and you do want to tune into the show live, you'll be able to go to cfrn.net/live. Okay? And I think that's going to do the trick. All right? Very good. So the chart I have up, S&P 500 E-mini, we have had a week which, well, look here. You know, here's the all-time historic high right here. Let me tighten this chart up a little bit. There we go. Now, this is the December contract. So the all-time high, 32 and a quarter. Now, as we came into that new all-time high, take a look at the days surrounding that. Okay, every time we get near an all-time historic high, there's a battle between buyers and sellers, and each time that we've put in a new all-time historic high, well, this is what happens. It's not always that drastic. It can be more drastic. Here, let me show you more drastic. Now we can go back to the worst December since 1932, right there. Okay, which came after a new all-time historic high. We go up, we do this, which leads to that. A new high, which leads to that. New high leads to that. New high leads to that. And this leads to that. This time up, we put in a little double top there, as you can see on this daily chart. But we did not put in a new all-time historic high. We made a run at it, made another run at it, pulled back, made another run at it, and, well, you can see where we are here on this Friday, 18th day of October, 2019. Struggling sideways. Right now, the Bears have the ball, and they are taking it downfield. If we look at just this last leg up, now, the last leg up would be this one right here. From that low to that high. Okay? Now, we could also look at the entire move off of the August low, August 6th. If we do that, it looks like this. From the August 6th low to the September 13th high, we got a 62% Fibonacci retracement. There's a leg and a retracement, and here's the last leg up. Now, what we're looking for on a chart like this is something called congruence, confluence. Different people give it different labels. Amounts to the same thing. What you're looking for is these fib areas that overlap. So on just the last leg, there's the 24, 38, the 50, the 62. The entire move, okay, that's going to be the long line, 24, 38, 50, 62. Now, you'll notice the coloring here seems a little different. What's that all about? The 62% fib on just the last leg up, that aligns with the 38% Fibonacci retracement of the entire move. Okay. This will serve as good support if and when price gets there. This isn't a forecast that we're headed there right now. We are printing a red candle though, And remember that markets often fall much faster than they rise. In order for markets to move higher, that requires financial commitment on the part of buyers. For the markets to fall, all that has to happen is for buyers to just simply say, yeah, I've had enough. They step aside, let nature take its course, and then they come back and do what buyers do, buy, except they're buying at a better price. Everybody's a bargain hunter, right? Everybody's always looking for a better price. And when the writing is on the wall, that's often what buyers will do. Step aside, again, let nature just take its course. So these are all areas where the market may potentially find good support. I gotta turn that phone off. Okay. Tell you what, somebody's desperately trying to get through. So let me go see what it is they need. And let me give you the numbers from around the world here real quick. And then Michael will come in, give you a recap of everything that happened this morning in the live training room. Starting here in the US, the Dow is currently down 151 points. NASDAQ is down 86. S&P 500 down 14. And the Russell 2000 down 10.5. In the commodity basket, crude oil up 3 cents, trading 53.96 last. Gold down $4.60, trading 14.9370 last. In the Asian markets, at the close, the Nikkei posted a gain of 40 points. Shanghai was down 39. The Hang Seng down 128. And in the European markets at the close, FTSE down 31, DAX down 21, and the CAC down 36. 2 days in a row, no real movers or shakers globally. The Shanghai being down 39, that's about 1.25%. Otherwise, it's been some violently sideways trading. Actually, the NASDAQ currently down 92. That's a little over 1%. NASDAQ leading the pack to the downside. And here's a glimpse at that. Where is it headed? Well, price is always trying to get to a weekly trading zone. From the moment the markets open Sunday night at 6 p.m. Eastern until they close for the week, Friday afternoon, 5 p.m. Eastern, price is always trying to get to a weekly trading zone. Now, Michael's going to do the recap. I'll be back. We'll go over the Concierge Trade Alerts, logic. We'll talk about these market conditions that we've been dealing with all week. And by the time I come back, again, this is not a forecast, but it is a high probability the NASDAQ, the NQ E-mini, may very well find this zone, which is sitting right below at 78.48/49. So with that, I'll turn you over to Michael, and I'll be back.
Okay. Excellent. I will take the charts. Yeah, that is an ugly candle right there on the NASDAQ. All right.
Okay, let me drag this up top, and all right.
Yep, you are seeing my screen.
Okay.
Okay, excellent. Bring this up. Okay, good afternoon, everyone. Today's Friday, the 18th day of October, 2019. 18th day of October, 2019. Now, to take a free trial with us, if you want to take a free trial with us, go to the home page here at CFRN.net. In the right-hand column, it says 5-day free trial. Apply.cfrn.net. Click on that, and you'll be brought to this page, eminitrainingschool.com. You can go directly to this page if you want to. On this page, all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, we don't know that you took the free trial until you click that confirmation link. Okay. Results. Sadly, today We were moving violently sideways, and we started out with a stop out on the euro. Then we got back to break even with the crude. Then we stopped out on crude twice. And that was our day today. We did not get the goal for the day. We were -8 on the euro, -11 on crude, -160 overall on the morning session. It's the truth about trading, guys. And we did it all in 8 trades. Today, as of today, on the month now, we're up $1,852. And that's over 14 days, averaging $132 per day. On the year, we're at 30,283. That's over 189 days, averaging $160 per day. 160 per day. Okay. Now let's go and see what did or didn't happen. We did miss a couple of nice trades today that would have gotten us the goal for the day had we gotten them. But, well, as I said, we didn't. On the gold, we went long right here. Got a break even on that. We missed this short right here, which would have gotten us the goal for the day. Then we followed that up with another break even right there. And we missed the long right up there and the long right here. And then we get into the break, and you know, we had sort of a head and shoulder pattern here. And this was the neckline right here. Right here was the neckline. You could have shorted off the BBC right here, and that would have given you a pretty nice profit. It's starting to set up a possible long trade right now. We got the bullish cross going on down here. We had the bullish cross right here. So we would look for an up close there on the gold, like that, 95.2. And that would be a long opportunity like that. Okay. Now, step over here to the euro. We had just the one trade, stopped us out pretty much to the tick, and then it just went sideways all morning. But it did manage to stop us out pretty much to the tick. And during the break, it had just a big leg up, but no trade opportunity. Okay. Crude oil. Oh. We missed this beautiful short right here. That would have given us a goal for the day. But we started out really choppy. And then we jumped in on the follow-up from that leg. We got this one where we got 5 ticks. It did actually go to the point where it would have given us the goal for the day had I put a target on it, but I didn't. Then it went sideways again. It dropped down, didn't give a trade setup, sideways. Then we had a shorting opportunity there that we missed. We had a shorting opportunity here that we actually took. That we actually took, and I ended up getting a break even on it. It gave us, what was the entry on that? 54 down to 53.90. That was enough to get the goal for the day. But I put the order on, and then I stepped away from my desk for a minute, and I forgot I had the order on, and I ended up getting a break even on it. Then we stopped out there, and we stopped out there. This one was pretty much to the tick, and then it went and did what it should have done. And I missed this short right here, and then we get into the break. And during the break, it was really choppy in here. Really choppy. We finally started trending, and we just didn't get a trade set up. Okay, so it's just been tough to get the markets in sync with the indicators today. All right, on the ES, we started out here, it was just really choppy, no trend at all. Then it came down to the weekly trading zone, and it stayed down there at the weekly trading zone for a while. Finally, it broke through the zone and gave us a shorting opportunity right here. We got a break even on that one. And then I went back up to the zone, and now you're in the break here. During the break, that was a shorting opportunity here. And here. And here. No, actually, that wasn't a shorting opportunity. And that was it. And that was it on the day for the ES. So this violent sideways action is just crazy. Okay. Back to this. All right. We lost 8 ticks in the euro, and we lost 11 ticks in crude today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. That's the truth about trading. You don't make money every day. Make money most days, but anyway, on the month we're up $1,852. That's over 14 days, averaging 132 per day. And on the year, we're at 30,283. That's over 189 days, averaging $160 per day. Okay, and that's exactly what we lost today. All right, wait a second. I gotta bring that back up. Hold on a minute. If you have not taken a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, you'll be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So make sure you click that. Okay. Okay. And with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. I don't think he's ready. He'll come on in a few minutes and say, did I miss my call? H-I-J-K. There. All right. Yeah, John's not in yet either. And that gold isn't going anywhere right now. We have red here on the YBR on the ES and the down close. Do a study on that. All right. Does anybody have any questions about anything? Anything that I've said or shown you? I'm here to answer your questions. Okay. Over here on the ES right now, it's pulling back down to test the BBC. We have bullish separation down here. Now, the red on the YBR suggests that price is pulling away from all the indicators. All the indicators are saying down, and price is pulling away from it. That's what it suggests. Interesting. Okay, now the gold just closed up above the MA1, so your stop should go to break even on that, like this. Okay. And, well, and now we'll lock in just a little bit of profit and see where it goes. It should break this dynamic resistance and get up above 1496. That's what it should do. I don't know what it will do, but that's what it should do. Okay. All right. Well, black step lines crossing down below the BBC over here on the ES, disqualifying long trades. So the red on the YBR followed by a down close. Did produce profit again. I'm going to do a study on that. Blue followed by an up close. Did produce profit. Blue followed by an up close. Interesting. Does anybody have any questions? I'm just waiting for Dwayne to come back in. Because he's got... Yeah. There you go. Okay. You are back. And... Okay. All right. Okay. Never heard of it.
Yeah, it's all the rage. Yeah, all the cool kids are taking it. Okay. Charts.
So far, I still have them.
Yeah.
Okay.
Yeah, I got it now. There we go.
There we go. Now you have.
Okie doke. Well, I said that by the time I came back, price might very well find the weekly trading zone below at 78.48/49. In fact, it has done that, and it sliced through it. Only three things happen when price encounters a weekly trading zone. The most likely thing to happen is consolidation. Second most likely is rejection. The least likely, but it does happen, as you can see right here, is what we call the slice. Now, what we anticipate happening when price slices through the weekly trading zone, as it just did, when the move runs out of steam, as it did, at least for the moment, we expect price to pull up, in this case, to the zone. You see, coming down, we expect it to be good support. And when it fails to be good support, well, the other option is, okay, can you be good resistance? So this is what the market is doing right now. It's pulling right back up to the zone, testing for good resistance. If it finds good resistance there, we will embark on a journey that takes us to the zone below. Now, these orange colored lines on the chart, let me just back up to where those started. And let me do this. Let me change that from array to finite. There we go. So it doesn't clutter up the chart quite so bad. Let me just get rid of that one for now. Okay. So this is the NQ we're looking at. And we'll start at the Sunday night Globex Open on each of the different markets. Just want to pull that label over. There we go. Okay. And since I have the NASDAQ up, we'll go ahead and start there with the Concierge Trade Alerts. Now, if you've experienced any difficulty this week with your trading, if it seems like everything you do, the market turns right around and does the opposite, well, don't feel alone. I believe I'm safe in saying, no matter what methodology, no matter what strategy you employ, you've experienced some turbulence this week. And the turbulence, may not be over. However, this move that we're seeing right here could be the thing that kind of breaks up the logjam. Now, with futures, it doesn't really matter to us which way the market goes, up or down, because with futures, you can trade long or short in the same session, even in the same hour, if that's what the chart dictates. There are some hurdles to shorting the market when you're trading equities, that type of thing. Those barriers don't exist with futures. As investors, of course, everybody wants prices to move higher. But intraday trading, swing trading even, up or down, as long as the market is going somewhere. Now, there are times when the market isn't going anywhere. It's always trying to go somewhere, but it's unable to. And that's because, I'm going to go to the S&P just to give you a point of reference here. Right here. This is ugly, nasty, choppy, very difficult to navigate. And this little rectangle, I can just stretch it on over because we caught this move here. Now, when we approach a zone from above, we expect it to be good support until it isn't. So we get below the zone. That tells us that the market is trying to get to the zone below. However, buyers came in here. Well, they first came in here, pushed it up. Sellers took it down, buyers pushed it up. Sellers took it down. Buyers back at work. Sellers, buyers, sellers, buyers. Well, you get the picture. Now, we finally broke free of that stranglehold for just a minute. But the market was not able to achieve its objective, which was to get to that zone overhead, which sent us back to this same zone, same area. So just as we broke free of this range-bound market here, it appears the market is breaking free, or has broken free again in the opposite direction. But all that is a larger version of this. Buyers push it up, sellers knock it down. Buyers push it up, sellers knock it down. Buyers really do manage to push it up substantially for sellers to knock it down. Back to support, back to support, back to support. This morning, the 9:30 a.m. opening candle on Wall Street, buyers were there. They did their job. They pushed it right up. Here's a little tidbit. You can file it away. You don't have to believe me just, you don't have to believe me just because I'm saying it, but make a little note. Watch this going forward in your own trading. And at some point, you might decide, hey, there's something to that. I'm going to remember it. When you see the opening 30-minute candle on Wall Street, you see a directional move with no wick on top or bottom, or very little. I mean, basically that first 30 minutes, buyers were just pushing it, pushing it, pushing it, pushing it. And we came off just a tad as we were moving into the second 30-minute candle of the day session. In the Telegram channel and in the live training room, you'll hear me sometimes say, well, the stage is set for a potential 10 a.m. reversal. Okay? I look for a 10 a.m. reversal when the first 30 minutes is what I just said, a directional move up or down that leaves no wick or very little wick on one end or the other. Okay? So you just make a note on that, put it on a post-it note, stick it on your monitor, watch it over the next few weeks, few months, and you'll see what I'm talking about. Now, is that in and of itself a strategy? I would say no. I would say just use that as a guideline to back up whatever methodology or strategy it is that you're currently using. Okay, just something to kind of be aware of. Always be aware of your surroundings and what's going on. So I started on the NQ, so I'm just going to jump back over there for a minute. Okay, we've pulled back up. Now, what do we expect? We expect it to be good resistance. We expected it to be good support coming down. We sliced it. We pulled up. Now we'll see what happens next. Let me go over these Concierge Trade Alerts from last night. If you would like to grab a screenshot, I'm going to pull them up so that you can see them and do exactly that. We had an open house today. Great turnout. Good to see all of you that were able to come, able to attend. If you were there this morning, you heard me extend an offer. This afternoon, I do have some free time. If you would like to book a one-on-one mentoring session where you can ask any questions you have about our method, our strategy, our indicators, or just markets in general, get a hold of Valerie. On our website, you can book a mentoring session with me, but that requires 24-hour advance notice. But because I have free time today, if you want to get together this afternoon for 15 minutes, half hour, whatever you need, and whatever time I have available, call Valerie at 949-42-EMINI, or just send an email to support@cfrn.net. Okay? All right, here come the concierge. Got him out last night at, well, that's clever. Oh, it'll tell me right here. 6. I forgot to put the time in. I always put the time right at the top. I guess I was in the process of typing it and didn't get it in. So this is Pacific time because I'm on Pacific time. I'm in Phoenix, but because we don't do daylight savings time, 8 months out of the year, we're on Pacific time. The other 4 months, we're on Mountain Standard. Whatever your time zone is, Telegram reads your computer clock. So if you're on the East Coast, yours is going to say 9:27 p.m. If you're Central, it's going to say 8:27. Okay? All right. Now my chart is set to Eastern. I wish I could switch the way Telegram reads the computer clock so that those numbers would correspond with the chart, but you know the backstory. You got a copy. So now let's take a look. Okay. On the NQ, consider being short 79.27. And that's going to be right about here. Now, on a Concierge Trade Alert, the trade to target on a short trade will be the weekly trading zone below. On a long, it will be the weekly trading zone above. Okay. Let me shrink this a little bit. There we go. Okay. All right, the opening, the Globex open last night was right there. And the alerts came out during that first 30-minute candle. So I'll put a little arrow right above it. There we go. Now, the weekly trading zones go out to the partners and passport holders every Monday morning at 6:15 a.m. Eastern. They're also made available in the private Telegram channel. We've been publishing the zones since December 14th of 2009. So we're coming up on a 10-year anniversary. Now, once those are published for the week, they're carved in stone. We don't change them, massage them, manipulate them, anything. They just are. Now, as you can see, when price is falling, we expect the weekly trading zone to be good support till it isn't. And as price moves higher and reaches a zone, we expect it to be good resistance until it isn't. And I just got a message here from Mike G. Trump's speaking now, just a heads up. Now, is this a scheduled talk, Mike? Do you know? He's on the phone. Anybody in the audience know? Is this a scheduled talk or an off-the-cuff kind of thing?
It was not scheduled. It was not a scheduled talk.
Okay, so I don't know what he's talking about. We'll find out here pretty quick, I'm sure. Let me get the chat box open. If you have any questions, that's what you want to do, is put them in the chat box and we'll get them answered for you. All right. So, the Concierge Trade Alert. So, being short 79.27. The trade to target would be 79.16. The swing low is actually 17 and a quarter. Okay, so we're looking for basically an 11-point move, and we missed it by a point and a quarter. So a 10-point move in the NQ, which pays $20 a point, that's $200 per contract traded. Now, important prices and important areas are almost always tested. So here's the first trigger. Price gets back above the trigger, runs into this resistance here, which we'll talk more about in a bit. We come down, we trigger a second time. So this is $200 per contract traded, another $200 per contract traded. Then we have consolidation at the zone, and then the move that we were just discussing is underway. Now, again, when price drops to a zone, look for support. When it rallies, look for resistance. Here, buyers came in a little bit early. As they pushed it up, they ran into this same area of resistance right across here, turned it back down, took us to the zone. Buyers showed up, as we anticipate, rallied it right back up to this same area. Let me highlight that area. Anyone that tells you support and resistance is broken or old-fashioned or just doesn't stand a chance in the face of algorithms and high-frequency trading and all that jazz, well, I don't know. I guess you ultimately have to be the judge. Okay? Remember, Monday morning at 6:15 a.m. Eastern, all of our traders knew to anticipate 79.15.16 as support, 94/95 as resistance. When you come to grips with the fact that price is always on a mission. Now, you'll hear me say that price is always trying to get to a weekly trading zone. Let me just clarify that. I don't want to sound too self-promoting or grandiose here. Maybe this is easier to digest. Price is always trying to go somewhere. I think we can all agree on that. Even when it's locked in one of these epic battles that we just looked at on the S&P between buyers and sellers, price is trying to move higher, until the sellers come in, and then it's trying to move lower. When you're able to determine what price is currently trying to do, what its objective is, when you're able to determine that and have a reasonably good idea of where it's heading and what the most likely thing is to happen once it gets there, well, I'm not going to say that makes trading easy, because there's nothing easy about trading, but it does make it simple. So you have to ask yourself, if you're not one of our traders yet, and if you did not have access to this at the beginning of the week, yesterday as it was transpiring, and today, could that have made a difference in your trading? Now, this isn't an anomaly. This isn't a one-off. I'm not cherry picking a chart to show you. I'm going to show you all of them, as we do every day. You can go to our YouTube channel, youtube.com/CFRN. You can scroll back a few weeks, a few months, or even a few years. Pick a show at random. Fast forward up to the point where Michael and I are doing the recap. And just as everything you saw him say and do this morning is going to be the same thing he was saying years ago, pick a show at random, same is true with the zones. Okay? We've been publishing the Concierge Trade Alerts about 6 years. Now, the Concierge Trade Alerts, that's this. Weekly trading zone is this. Okay? Now, the Concierge Trade Alerts are based on prior price behavior. When we get to the Logic 247 alerts, those are the dynamic, in the moment, as it happens, as opportunity develops. It could be 2 a.m., it could be 2 p.m. When the market moves, when a high probability opportunity presents itself in any of the futures markets that we watch, your phone will go dee-dee-dee, or your tablet or your PC. Logic follows you wherever you are. Now, if you don't want to trade, you're out to dinner, or you're trying to get a little sleep, you just simply turn the alert, turn the notification off, and when you're ready to go back to work, you turn it back on. Any alerts that came out while you were having a nice dinner or catching a bit of rest, they'll still be there. And the good news is, important prices, important areas are almost always tested. So when this one triggered at 3 a.m. Eastern off the London Open, if you missed that one and you really like to trade the NQ, here's where patience comes in, because at 10 a.m. Eastern, triggered again. Not an anomaly, not a one-off. We see this same type of repetitive behavior over and over, day after day, week after, well, almost a decade now. On the weekly trading zones, when price comes down, think support. When price rallies up, think resistance. So we had consolidation here. 3 things happen. The most likely thing is consolidation. These are 30-minute candles. So while it looks like, price wasn't there very long, it actually was. Because a lot happens inside of a 30-minute candle. Over here, consolidation. This is rejection. Okay? When price rallies up, touches a zone, and is rejected and leaves this wick in its wake, the image that always comes to mind for me, I walk into a room, there's a stove. I touch the stove. Why? I don't know, but I do. And it's hot, and I snatch my hand back. Touched it, snatch it back. Rejection. So on this chart, on this one chart, this screenshot that you see right now, you see consolidation, you see rejection, and you see the slice. Now, the slice is behaving a little bit differently than what we normally anticipate. I'm going to add the indicators here in a minute, and that's going to help clarify the picture and help you to see exactly what it is that we see. Now, on weeks like this one that we've just experienced, price does not always do what you expect it to do, the next high probability thing. And that's okay. You can actually take some solace in the fact that you know what the next high probability thing is. And when it doesn't do that, you see it, you recognize it, and then you take whatever measures are necessary, whether that's exit the position or, it's going to be based upon your style of trading, your methodology, your strategy. If you should become a CFRN partner or passport holder, then what we're going to do is we're going to spend a lot of time working with you both in group settings and one-on-one settings, teaching you how we see it and how we think about it, which leads to the actions that we take. Okay? So just remember, consolidation, most likely, rejection, second most likely, slice, least likely. Now this move from zone to zone, and we do have traders that just trade zone to zone, from 79.15 to 78.49, let's call that 65 points. Alexa, 65 times 20, please.
65 times 20 is 1,300.
Okay, so from zone to zone, that was a $1,300 per contract move. Okay, it's the NQ. The flip side of the NQ was to consider being long 79.75, and as you can see, we never moved into that territory. What we teach our traders to do when the Concierge Trade Alerts come in each evening shortly after the Globex Open, go to your chart and put two lines in the sand. Again, the lines I'm talking about are right there, 79.75, 79.27. I've already got the 27 line up there, so let me put the 75 up there. Whatever happens between those two lines, once you put them on your chart each evening, and we cover 8 different markets, S&P, Dow, Russell, NQ, gold, crude, soybeans, and 30-year bonds. Everything in between is the market making up its mind. Okay? It thought it had its mind made up. It did. I'm going to get to that zone below. Again, price is always trying to go somewhere. What our zones do is they give you a point of reference. Okay, I can see it's trying to move higher, but where is it trying to get to? And I can see it's trying to move lower, but where's it trying to go to? This is a good example here. Not an anomaly, not a one-off. This is the kind of repetitive behavior that we see day in and day out. And again, I encourage you to go to the YouTube channel, do scroll back a few months, because the consistency is what all traders are looking for. Whatever strategy or methodology you use, if you've kind of gotten a handle on things, you've reached a point where man, if I just wish I could have some consistency, because my great days are really great and my bad days are just horrible. And those bad days, in a few hours, you can wipe out a few days, a few weeks, even a few months of positive production. Consistent profitability can evaporate if you don't recognize the market conditions that you're dealing with, and if you don't understand what price is trying to do and why. It's important to know where the buyers are, where the sellers are, where you can expect support, where you can expect resistance. Now, does the market always do the next high probability thing? No, not always. See, here, the high probability thing was a move back up to the zone. However, we knew that there was an obstacle in our path, these previous swing highs. And we did know that if price could not get through that obstacle, well, the only other option would be a return back to the zone. And when it found good support at the zone, we knew the high probability move would be the zone overhead, but again, it would have to overcome an obstacle in its path. It was unable to overcome the obstacle, so it sent it back down to the zone where we consolidated. Now, the direction of the market is dictated by order flow. Are there more buyers or sellers at any given time? When you're printing a red candle, just know that sellers have the ball. When you're printing a green candle, buyers have the ball. But outside of just the one candle, knowing, because you see on this move up, or on this move down, you'll have green candles. On a move up, you'll have red candles. So you really want to learn to take a look at the whole picture. All right, let's jump to the S&P. Now, I gave you a lot of information on the NQ, but everything I said about the NQ, I won't repeat it on each market, but it's the same for each market. And let me just say, I know that there's a school of thought out there that says you can't trade all markets the same way. You got to have a different method and different indicators and a different strategy for different markets. You can't trade the S&P the same way you trade gold or crude or soybeans or bonds, but we say that you can. Now, I don't deny that different markets have different personalities, etc., but that doesn't change their behavior when they approach an important price and an important area. In an auction-style market, you've got buyers on one side, sellers on the other, and price is constantly channeling back and forth between buyers and sellers, okay? All right, let's go to the S&P. Now, this area that I already pointed out right here, that is unusual behavior. Normal behavior looks like this. Price is above the zone, pulls back, holds as good support, leg, and a retracement, and a leg right up to the zone. This business here, the market is having a very difficult time making up its mind. So we're higher than lower, higher than lower. The best thing you can do with this is leave it alone. And that's a really difficult lesson for new traders to learn, because let's face it, you've decided to become a trader, and so you want to be trading. But sometimes the market conditions just aren't conducive to trading. Let me go back to the NQ for just a second. I said I was going to add the indicator and I didn't do it. So here we go. Now this is just one more dimension, and then that's everything. You've seen it all, okay? When price is below the green line, we call that the BBC. What that means is bull-bear cross. When price crosses above, we anticipate higher prices. And when price crosses below, we anticipate lower prices. That sounds very simplistic, very elementary, but hey, if you want to complicate the business of trading, there's 1,000 different ways to do that. There's an endless array of indicators and oscillators and studies and all sorts of things, but they're not necessary. They're not required. All the different things out there, I'm sure that they all do a perfectly good job of whatever it is they were created to do, whether it's stochastics or MACDs or Bollinger Bands. So I'm not saying that other things don't work. Again, I'm sure they do exactly what they were created to do. But for us, and the simple nature of our trading methodology, it just confuses the issue. And we've worked very hard to make everything simple. So when price gets above the BBC here, what do we expect? Higher prices. But we know we have an obstacle overhead, okay? When price gets below the BBC, we anticipate lower prices, and we know that we have support right below us at this zone. Same down here. As long as price stays below that green line, the bull-bear cross, we anticipate lower prices. Is price pulling back right now to the BBC? It is. Price always reverts to the mean. Look here. You get a leg and a retracement. Right back to the BBC. Leg and a retracement. Leg and a retracement. Now we get below leg and a retracement. Leg and a retracement. Leg and a retracement. It holds more often than it doesn't. And when it doesn't hold, this is what it looks like. So pretty quickly with us, you start to have some clarity. The fog and the clouds part. And just by looking at the chart, the way I have it laid out right here, at any given time, you have an understanding of what the objective is, what the market's trying to do. Now, we know that we can't move markets. We can't outdistance it, outthink it, outspend it, any of that. So if we can just recognize what the market is doing at any given time and then just do the same thing, the results are on the chart. Okay, so back to the S&P. Last night, Concierge Trade Alert on the S&P, consider being short 29.83. It's right here. Okay, and the swing low so far, 29.75. So that's an 8-point move in the S&P at $50 a point. That's $400 per contract available. Better spell it right. There we go. $400 per contract available. And the number again was, considering short 29.83. Important prices, important areas are almost always tested. So even though we're printing a green candle, our understanding is that price has made a statement. It's trying to get to the zone below, but price always reverts to the mean. Rarely do you see a price move in a straight line. So where's it rallying up to? Is it going to rally all the way back to the zone? Honestly, I don't know. Neither does anyone else. Doesn't matter, you know, what they tell you. Man does not have the ability to know the future. When God created Adam, he just didn't see fit to give man the ability to change the past or know the future, and those two are inextricably linked for eternity. Price always reverts to the mean, so we very well may pull right up to the BBC and to the weekly trading zone, where we expect to find good resistance times 2. Why times 2? Well, the zone itself represents, at this point, potential resistance, and pulling up to the BBC also represents good resistance until it isn't. As you see here, on this move down, we pull back, good resistance, but you were pinched up between the BBC and the weekly trading zone. And this is what it looks like when it doesn't hold. Remember, it holds more often than it doesn't, unless you're caught up in this crazy sideways choppy type of market. Okay, the Dow. Last night on the Dow, consider being short 26,915. That swing low 26,912. $26,915. Okay. Now, when price reaches a trigger, remember, and let me put the other trigger up there too. 27040. Okay. So that's our two lines in the sand. Everything in the middle is price just trying to make up its mind. It gets below the zone, gets to the trigger, and order flow does not complement a move lower. So here's what happens. When we don't trigger on the long side, that takes us back to the trigger. As we move through the trigger, that takes us down to the zone. From Alexa, 915 minus 755.
915 minus 755 is 160.
Okay, so the market made 160 points available. Alexa, 160 times 5, please.
160 times 5 is 800.
So an $800 per contract move.
I'm not quite sure how to help you with that.
Okay, well, thank you for trying. So from the trigger at 915, and we didn't quite get all the way to the zone. The swing low was actually 59, so we missed it by 4 ticks. $800 per contract move. Never triggered on the long side, triggered here. Now, where were the indicators while this was happening? Let me show you. We're below. We expect lower prices. We find support at the zone. We get back above. But we have obstacles in our path. On this move up, we've got an obstacle there, there, and there. And it was this obstacle right here that prevented price from triggering on the long side or completing that move up to the zone above. So it turns it around right there, bearish cross. You now officially are anticipating lower prices. And as this thing triggers, your trade to target is down here at 26,755. And again, we came about 4 ticks shy of actually reaching the zone. Okay, so let's go to the Russell. All right, on the Russell, consider being short 1533. So the move to the zone, it's just 3 points, but now we did spike it, but it held. Remember, it's going to hold more often than it doesn't. Consolidation, consolidation. So at $50 a point, which is what the Russell pays, a 3-point move is $150 per contract traded. Important prices, important areas, almost always tested. So we've come back now. We're back above the trigger. The next high probability move, let me show you. We'll look for price to pull right up here and then give us another leg to the downside. Leg, retracements, and a leg. Now, again, does price always do the next high probability thing? No, not always. But it does it enough times that you're able to call it the high probability thing. Now, the beauty of knowing the next high probability thing, well, it's obvious that, well, that's kind of good, but also when it doesn't do the next high probability thing, you're able to recognize it. You understand what happened. You're not left just scratching your head, wondering why you didn't get lucky this time. And if that's how you feel when you put on a successful trade, a profitable trade, if you feel lucky because you won or whatever, That's not where you want to be, okay? You want to have a logical understanding of what the market's doing. You can learn how to know using our methodology, our strategy, our indicators, our zones. You can clearly see what the next high probability move is. And then when the market starts to do something that does not coincide with the next high probability thing, you're aware of it, you know why, and you're able to take whatever measures are necessary as dictated by your methodology and strategy. Okay. On the Russell, the other line in the sand, on the other line in the sand was 1547, and price never quite got there. Okay. There are days that we see two-sided action, which means we trigger the long and the short side. Today, just the short side. Okay. Next, gold. Oh, let me jump over here before I miss crude. All right, there's crude. Okay. Now, let's just back up for a moment. Sunday night Globex open right here. Price falls to a zone after the Globex open Sunday night. And that's when we go to work, 6 p.m. Eastern Sunday night. And we keep the pedal to the metal until Friday afternoon at 5 p.m. You have round-the-clock guidance via the Telegram channel. So you're never alone, okay? There's always somebody you can ask a question, whatever it may be. And if you just want to shoot the breeze, we even have a channel for that. It's called CFRN Breeze. So price hits the zone. The most likely thing to happen is consolidation. It consolidates. It drops to the zone below. Finds good support. That's what we anticipate. It then rallies up. It's trying to get to the zone overhead, but it gets stopped by what was once good support becomes good resistance. But there's another element. Now, I could see that in my head without having to apply the indicators because we've been working with them for so long, so many years. But you see what happened? I showed you that this support became this resistance, but the additional element is that we put in a leg, a retracement to the BBC price always reverts to the mean, and then we sliced right through that zone. As long as we stay below the BBC, we anticipate lower prices. It took us right down to the zone. We expect that zone to be good support. It sent price right back up to the BBC. And when price approaches the BBC from below, we expect it to be good resistance. And it was, and it was, and it was, and it took us right back to the zone. Good support. Off we go. Trying to get to the zone overhead. We fall short because we run into an obstacle. When price can't get through an obstacle, it's going to turn and go the other direction, which it did, where it again found good support at the weekly trading zone. Support sent it to resistance, sent it back to support, back to resistance, back to support. Now we start getting above the BBC. We pull back one last time, confirm good support there. Back above the BBC, we make another run at the zone overhead. We run into the same obstacle. That obstacle, once again, sends it back down to the zone, back up to the BBC, back down to the zone. Once again, we get above the BBC, so now we're starting to think higher prices. Consolidate here, wide-ranging consolidation in between two Concierge Trade Alerts from a previous day. Remember, everything that happens between the lines is the market making up its mind. It thought it had its mind made up here, ran up $170 per contract, came back to support one more time, and then off it goes up to the zone overhead. Now remember, price has been trying to get to the zone overhead since October the 14th at 10:30 a.m. Eastern. It tried and tried and tried and tried and tried. Finally got there October the 17th, 2 o'clock in the afternoon. Consolidation at the zone, support at the BBC, off we go to the zone overhead, which, no surprise, turns out to be good resistance. When price can't move any higher, it's going to turn around and look for the zone below, which it found support, consolidated. We have a bearish cross, and that brings us up to where we are right here, right now. Last night, the Concierge Trade Alert for crude said to consider being short 53.55. So that thing just triggered on the short side. 53.55. So far, we've dropped to 53.35. So that was a $200 per contract move. Now the long side of that alert, got too many devices. Let me just show you crude one more time. Here was crude last night, 54.20, 53.55. Okay, so we already did the 53.55. Here's the 54.20 side. There's 54.25, triggered. I'll get this old line out of the way. Okay, 54.25. Where do we expect it to go once it triggers? Well, the target's 54.45. That's right where it went. Consolidated for 1-2 hours. Came back to the trigger, got below it, rallied right back up to the target. So there's a $200 move, back below the trigger, another $200 move. But price can't get through that zone. So what does it do? Goes back to the zone below, consolidates. Now it's making a move. It's trying to get to the zone below. Doing a pretty fair job of it. If you have any questions about any of this, please put them in the chat box. More than happy to answer any questions that you have. Let's see, we've done the S&P, the Dow, the Russell, the NQ. That's the only one we haven't done yet. It's gold. So let's look at gold. Okay, gold currently consolidating at a weekly zone. Last night the alert said to consider being short 1491. That's right here. And the swing low, 1488.30. So that's about $270. No, hang on. Yeah, $270 per contract traded. The long side for gold was $14.99, and we never got there. So we poked below, you know, for a couple $100 per contract, and then we go right back to the zone, right back to consolidation, back to the market once again, trying to make up its mind. Now, on crude, oh, by the way, today we rolled forward on crude, so alerts, any alerts that would go out this afternoon on crude, and of course everything we do Sunday night on the Globex Open will be on the Z contract for crude. So this is the last time we'll see the X. Okay. All right. There's gold. Right now, there is no high probability opportunity. The high probability opportunity will come when price moves above this trigger or back below this trigger. Everything in between is an opportunity They get repeatedly stopped out. You go long and the market goes short. So you go short and the market goes long. Oh, doggone it. Okay, so I better go long. And then the market goes short. It's frustrating. It's infuriating. And it leads traders to making decisions like, well, decisions that lead to blowing up another account. And bottom line is, it just doesn't have to be that way. Okay? I've blown up my share. Michael's blown up his share. You may have blown up your share. But I've got to say, unless you change something about whatever it is that has led you to blow up these accounts, unless you start doing something different, if you go down the same path, you're going to end up in the same place.
Doing the same thing and expecting different results, right?
Yeah, that's, what was it? Was it Einstein's definition of insanity?
Einstein. Yeah.
Anything you want to jump in here and talk about real quick, Michael? I think John's still on his conference call.
Yeah, I don't see John in the room. I was just looking around at the different markets, how the ES has bounced off the low of the day. The low of the day was down there at 29.75, we'll call it.
Mm-hmm.
And it's had a nice bounce off of it.
Yeah, it sure has. And the beautiful part of the bounce is we know where it's headed.
Mm-hmm. 29.92, 93.
And when it gets there, we also know what to expect. When price gets there, the high probability move is this way. Now, does that mean that's what's going to happen? No, it means that's the high probability thing to happen.
And you know, if you jump down to a smaller time frame, that move up had 1, 2, 3, 4, 5, 6 entry opportunities on the smaller time frame. 6 entry opportunities. So that's not to say that you couldn't have just gotten in it and stayed in it because you were expecting it to get up to the zone, but it is saying that there were 6 entry opportunities. And, so if you missed the first one, you could have gotten the second one. If you missed the second one, you could have gotten the third one.
Guys, here's what he's talking about right here. Bullish cross, price pulls away, price pulls back to physically touch, up close, buy the open of the next candle, +1 tick, boom.
And there you go.
Trading's not easy, but it can be simple. This is simple by design. This is, Michael and I have been working together since late 2005, early 2006. So a decade and a half almost. And we didn't stumble across simple by accident. It took a lot of time, blood, sweat, tears, and everything else.
It took a lot of removal is what it took. We had to, we had so many things going on at one time that we were the only ones who knew what was going on. And 3 different time frames, different sets of indicators on every time frame. And
we were killing ourselves with KMI. Too much information. Okay? All you need to know is what's price currently trying to do. That's all you need to know. If you can discern what price is currently trying to do, and you do the same thing because you know how to pick out a low risk, high probability entry, you don't need 1,000 indicators and oscillators, advanced decline lines, trends and tricks and all the other stuff. Okay? Again, I'm not saying anything bad about any of those. I'm sure they all do exactly what they were created to do. But for us, it begs confusion. If you've got 10 indicators on your chart and 5 tell you to go long, 5 tell you to go short, what are you going to do?
Yeah, nothing.
How about get all that stuff out of the way and just see what price is doing? Okay.
Our indicators are all based upon price action.
Exactly. When we got this bullish cross and price pulled away and pulled back, we knew beyond a shadow of a doubt what the next high probability move was. It doesn't mean that's what it's going to do this time, but we know it's the high probability. This is a business based on probabilities. All you need is a definable edge, and then the self-discipline to use that edge only when the opportunity presents itself. That's the range chart. We use the range chart for a number of reasons. One, there's a nice symmetry. Every one of these candles is exactly 4 ticks tall. And for the S&P, which we're on right now, you know that 4 ticks is 1 point. Okay? So each one of these candles is exactly 1 point tall. I can switch it out to a 5-minute chart. Everything that we do is fluid across all markets, all time frames. Bearish, this is a 5-minute bearish cross, price pulls away, price pulls back, down, close. Price always reverts to the mean. When it approaches from below, we expect it to be good resistance, and it was. Sent us lower. This is what it looks like when it holds. This is what it looks like when it holds. This is what it looks like when it doesn't hold. Rather than trying to, be fortune tellers, we wait for the market to show us, is it going to hold this time or not? Is it going to hold this time or not? Is it going to hold this time or not? So we're only going to put on a short trade when the market shows us that, yeah, it's going to hold. So we're going to get a leg, retracement, wait for it, leg, retracement, wait for it, leg, retracement, wait for it. Oh, didn't hold this time. Okay. Is this the beginning of something new where we go leg, retrace, back up? Possibly. But wait. We know we have, by looking at our 30-minute chart, we've got an obstacle overhead. Times 2. BBC and a weekly trading zone. Either one of them individually, when we approach it from below, we expect it to be good resistance. So we have just 2 things on our chart right now that are telling us the high probability move is up to here. Find resistance, another leg to the downside. If we embark on another leg to the downside, we have an obstacle in our path. You have to look at this area as potential support till it isn't. So from the trigger at 83 to the support down at 75, another 8-point opportunity. Now, if the selling pressure is great, even though we're even though we're printing a green candle, there is a chance we don't get all the way up to the BBC. But price is going to try. Buyers are going to push it. Now, understand, but traders getting along here, many of them have no idea what looms overhead. We found the bottom. This is the beginning of the next big rally. All aboard, load the boat, etc., etc. Well, I don't fade the trade. With all the alerts, okay, right now on the alert service, now in the live training room, we teach you to trade exactly what's in front of you. Okay? As you move out into the bigger time frames, if you become a passport holder and I start to teach you how to trade in this 30-minute environment utilizing the logic alerts and the concierge trade alerts, yes, I would put a short trade out, but I wouldn't put a long alert out. Not that that isn't valid. And on the smaller time frame, I just showed you that 5-minute chart. Well, this was just trying to get bullish. Let me go back to the 4-tick range. Was there opportunity to the upside? Absolutely. Some people call that fade the trade. Probably what you're familiar with is just counter trend because the trend is currently down, and so going long is counter trend. That is a valid trading strategy. I have nothing bad to say about it, only that it doesn't represent the same high probability opportunity as a trade that aligns with the trend. Michael, anything you want to add here?
Well, all the stuff that we do in the room in the morning is going with the trend. That's, we don't try to buck the trend at all. Over all the years that we've been doing this, the trend is your friend is the saying until the end. And given the weekly trading zones and the BBC and all the other things that we've developed and made over time, you have a pretty good idea where the end is going to be. So, just if you're looking in the slingshot, if the cycle's going against you too steep, you have a good idea that the end is near. And there is just, I don't know. Trade with the trend until the end, and we give you a pretty good idea where the end's going to be. Like right now, on the ES, the cycle's going down pretty steep.
Here, I'll open up the cycle down here. What time frame are you looking at?
On the 4 range.
Okay.
It's about it.
Come on. There we go.
Yeah, you see how it's turning down right now? That suggests that we're going to get a pullback, and it'll probably be a pullback down to like the 2984 area, and then move back up. Because we know it's trying to get up to the zone up above, and the zone up above at 2992. So it'll probably pull back down to the 2984 area, and then make another 8-point march up. And then, well, I don't know, then we might be at the end of the day. It might end the week there, right in that area. Yeah. It's what you get when you become a partner. And if you become a passport holder, and you get everything, well, then you have a lot to absorb. Well, it's not really a lot to absorb. It's all the same stuff. It's just different time frames, and understanding the different levels of risk that you have to use. That's pretty much it. The stuff that we do on the 4-tick range chart, you can do on an 8-tick range, a 10-tick range. You can do on a 5-minute chart, 30-minute chart. I like the 15-minute myself, but
none of our time frames are magical.
Yeah, no, there's no magic.
You just need to pick a time frame and get to know it. Understand what the market looks like.
John's.
There's John.
There's John. Okay.
Dope.
The beauty of the 4-tick range chart, or any range chart, really, is that if you know where the top of the bar is, you know where the bottom's going to be, and if you know where the bottom is, you know where the top's going to be. So you can be proactive in your trading. That is the beauty of those things. Let me open up John's mic. There you go, John. Your mic is open.
Hi there.
Hey, John. Welcome to the show.
Thanks. Sorry I'm a bit late today.
No worries.
There's a few things that are going on today that are pretty big. In spite of the news out of China, copper is up sharply.
GDP, China's GDP, we talked about this on the show yesterday. I said, guys, watch tomorrow night. China's got a lot of economic reports coming out. Worst GDP since they started keeping records.
And what was the actual number?
I've got it right here. Hang on and I'll pull it up.
In China?
Yeah, last night. We talked about it yesterday during the broadcast. Okay, let me get my economic calendar up.
I don't even show that on my calendar.
You'd have to look at yesterday.
Oh, okay, last night.
Last night.
Okay.
All right, we had about 8 or 9 economic reports coming out of China. The GDP.
6%.
Yeah, they were looking for 6.1, and it says 6. Now, I'm not sure. I saw the
Take
headline
5.
this morning
Take
that
5
said,
right off that.
I saw it
5
several. I saw it.
It's fantastic. Listen,
I saw it several
you know,
times. It said it was the worst one since they started keeping records in the early 90s.
It looks like 2009. 2009 was pretty bad too. I'm looking at an actual bar chart right now of the GDP, and it looks like 2009 it was 5.9%.
Okay. China.
it is. Listen, the GDP. If the GDP was 5.9%, the stock market would be at new all-time record highs. It's just this is a crazy number.
Here it goes, John. China's economic growth drops to the lowest level since 1992.
It's
Reported
it's
by
not-
CNN, Financial Times, Market Watch.
Do you believe it's 6%?
I don't know, John. Somebody brought that question up yesterday. They put it in the chat box when I was talking about it. They go, "Do you really believe any numbers you get out of China?" And I said, "Well, not
can't-
particularly, but
they
it's the
kinda
number. You have to deal with it."
Here, Dwayne, I'm gonna send you a screenshot
Okay.
in Telegram, and you can put it up.
Okay. China's growth dropped last quarter to its lowest level in nearly 3 decades as the world's second largest economy continues to feel the pain from the trade war with the U.S. That's exactly what Trump was after. China's gross domestic product grew by 6% in the 3 months to September 30th, the weakest quarterly growth rate since 1992, and down from 6.2% in the April to June period, according to government statistics released on Friday. It also missed the average forecast of 6.1 projected by analysts polled by Refinitiv. The worst than expected figures emerged just 1 week after the United States and China reached a tentative trade truce to avoid more damage to the world's 2 largest economies. Well, there you have it.
I'm looking for the Breeze channel. I can't find it.
Oh, let me look at Telegram here. In the search box, if you just type in Breeze, it'll pop up.
Okay. Search. REEZE. There it is. Well, a bunch of different breezes popped up. Oh,
CFRN Breeze.
delivery. CFRN Breeze. Well, here, I'm just going to put it in here.
Well,
The alert trial.
hang on. It looks like this, Michael. See this right here? See, when you type in Breeze, it should pop up just like that.
I just
it
stuck it
should.
in the alert trial discussion.
Okay. All right, I'll
So you
find
should
it
be able
there.
to look at it there.
Yeah. The market's nipped the early decline in the bud. And based on the VIX, the VIX kind of showed its hand yesterday, and we did get a pullback. Is that the Chinese chart?
Yeah,
It
that's
is.
what I was just
China's
putting in.
GDP, yeah.
Yep.
Wow.
Yeah, so you can see where it went from 2010 to now.
That's pretty interesting, that chart.
All right, S&P again pulling up to the weekly trading zone, pulling up to the BBC here. The high probability thing is to find good resistance, which sends us back to the trigger, which will then send us right here to the obstacle in the path of getting to the zone below. And we may see it unfold here in the next couple minutes. Now let me figure out what's going on with John.
Okay.
You're gonna have to choose one or the other, because I need to move into the good word for the day. Again, anybody that wants to get together for a mentoring session this afternoon, you want to learn more about being a partner or passport holder, we can have a discussion. We'll do it in a GoToMeeting environment, so we have access to the charts. You can ask questions. You won't have to type in your questions. When it's just the two of us, we can open up your mic and we can have at it.
I'll be available this afternoon as well if anybody wants to talk with me. Just go send an email.
All right, John, you back?
Yeah, can you put that chart up again? That's an amazing chart.
Yeah, sure. There you go.
Look at that. Oops. Well, remember I talked about this, it's supposedly 3 decades, I guess, in the 90s it was growing supposedly around this rate. But, the real part of that picture is probably from 03 to, or 02 through the Olympics, through 08.
Mm-hmm.
And it might be less, you might take a 3% off that, maybe more realistic, even 4%, so that the previous peak was about 10 or 9. This side of the picture, after I think that's exaggerated, the last decade. Because, jeepers, if an economy, the Indian economy is growing quite fast. It's only growing at about 5% or 4 or 5%. And the Indian market's been making all-time highs, or pretty close to it. So there's something wrong with this picture. It's you can't have, growth of that kind of pace without it being reflected in the market. It doesn't make any sense. Can you imagine if the U.S. economy was growing at 6%? You'd have Google. Where would Google be? Or Facebook and all these companies that are printing money,
Well, I don't doubt any whatsoever that China manipulates their numbers and figures and reports to suit their agenda, whatever that is at any given time.
Yeah. Because... we've said this before, we're 2 to 3% growth, and that's pretty much bread and butter for most companies out there, They're doing pretty well at these numbers. Maybe the U.S. growth is underestimated. That might be the bigger deal, that the U.S. growth is actually much higher than people think. Because I think the underground economy is bigger than people think in the U.S. And they're saying that the consultant economy, people who are working at home and building their own businesses and all that kind of thing.
The gig economy, they call it, right?
That's a gigantic thing in the U.S. It's a very, very big deal.
It is, and it's growing by leaps and bounds.
What was interesting this morning, Dwayne, was when the Nasdaq was getting clocked. I noticed that the mid cap came back real strong, and it's actually probably the leading market today. It's actually recovered. It's got a massive buy signal, and potentially. Could rebound pretty impressively here. If this is just kind of like Draghi, if Draghi is just like irrationally exuberant type of thing.
Here's the mid cap.
We could have a long time to go. Yeah, see what I mean? That's pretty bullish.
Oh, it is quite bullish.
Yeah, and even the S&P, is starting to look fairly dynamic there, just on your chart. The sort of market takes a bit of a pullback to go to run higher.
Yeah. However, we're running into a potential resistance right here at 92, 93. I think the potential for us to go back and test that trigger again.
If we turn down from here, it's not going to be good. It's not going to be good. And we were talking about the gold yesterday, and seems to be with this gold this time around is it doesn't feel ready to go yet.
All right, guys, we've covered the S&P. We covered the NQ. Now, again, we're catching that bounce. Support up to resistance, which can either be the BBC, weekly trading zone, or both. Here's gold at the zone, consolidating now for 1, 2, 3, 4, 5, 6 hours. Okay. If you tried to go long or short, or long or short, this thing's just thrashing about, trying to make up its mind. Putting on a position in between these two lines in the sand rarely makes good sense, unless the two lines are very far apart, and then you can catch a directional trend type move up to the trigger and then potentially beyond the trigger. Russell. Okay, now the Russell's at the BBC. All right, so if we're going to get this down move, we may see it reflected first in the Russell. The Dow just starting its pullback. And crude just still sitting right on top of that trigger. All right, guys, anybody have any questions? All right, we'll keep an eye on this. Let's go to our good word for the day. Yesterday, we talked about trying to learn something every day. It's always a good thing. Today, we're going to talk about stress or stress fractures. Isaiah 40:29. He gives power to the tired and worn out and strength to the weak. Sports Illustrated says this: stress fractures begin when the shocks and strains of playing the game after game after game create tiny cracks in outer layers of bone. When those cracks become large enough to cause severe pain, they are known as stress fractures. If you've ever had a stress fractured mind, you can probably relate. It eats at you by day, keeps you awake by night. And if you try to medicate it with alcohol or drugs or an affair, overeating, a hyperactive lifestyle, a flashy red convertible, it just gets worse. So what are you supposed to do? Number one, change your focus. Matthew 11:28 says, "Come to me, and I will give you rest. Let me teach you, and you will find rest for your soul." He gives power to the tired and worn out, and strength to the weak. They that wait upon the Lord shall renew their strength. Isaiah 40:29. So instead of just struggling alone with the burden, share it with the burden bearer and let him strengthen you. It's at the end of ourself that we find the beginning of God. Number two, lighten up. Proverbs 17:22. A cheerful heart is good medicine. Just, try not to make such a big deal out of everything. Choose your battles, as they say. Lighten up. Laugh more, especially at yourself. Do you even remember the last time you enjoyed a good belly laugh? Do you? we have to learn to accept our imperfections. We have to learn how to just let stuff go. And it's all stuff, big stuff, little stuff, it's still just stuff. And it's temporary stuff. You, my friend, are eternal. But the stuff around you is just stuff. Stop trying to be Superman or Wonder Woman. Just, let your guard down for a minute and have some fun. That's part of our nature, part of how God created us. If you don't break away from the grind from time to time and let your hair down, so to speak, you'll suffer the consequences. That stress fracture in your foot, if you keep running, is going to get worse. And that stress fracture in your mind, without some rest, some time to heal, it's only going to get worse as well. Maybe you can start by canceling some of your not so important meetings. I mean, they seem really important, but in the grand scheme of things, when we're talking about your health, your mental health, and the importance of this meeting, which has more value? If you really want things to change, then you have to change them. So I want to encourage you today. Talk to God. Put it on the table. He knows how to heal stress fractures, whether it's in your foot or in your head. And that's our good word for the day. Now, Monday we have a treat coming up for everybody right here at 1:35 p.m. Eastern. The ladies, Diamond and Silk. If you don't know who they are, tune into Fox over the weekend. I'm sure Jesse will have them on his show tonight, tomorrow. They'll be on there at some point. Diamond and Silk. Who are they? Lynette Diamond Hardaway and Rochelle Silk Richardson are biological sisters from North Carolina and are video vloggers, internet sensations, influencers, the host of The Viewer's View and Diamond and Silk Chit Chat Live. They currently work as contributors on Fox Nation and are known for their funny and upbeat political commentary. Their rhythm and rhymes such as Stump for Trump and Ditch and Switch, and their outspoken and loyal support for President Trump. My wife and I met them this past May at a Fox Nation meetup, and their larger-than-life persona that you see on TV, it exists in the real world as well. So they'll be here 1:35 p.m. Eastern this coming Monday, October the 21st. I hope you'll be here as well. Okay? All right. I hung out for John. I thought he might come back. He's got a bunch of important conference calls today, so we'll give him a rest. We'll pick up with him come Monday. Keep an eye on this chart. I'll post some screenshots later in Telegram. Now remember, the high probability thing is for price to find resistance here. Give us a leg to the downside. That's not predicting the future. Man does not have that ability. Neither does any indicator, oscillator, algorithm, machine, beast. God just didn't bake that into the cake. What we can know is what the next high probability move is. The next high probability move is to the downside. Okay? If that doesn't happen, if the next high probability thing isn't what happens, you'll know if you're a CFRN partner or passport holder. You'll know because price will close above the zone. It'll close above the BBC. And then instead of being short for the next move to the downside, you'll be long for the next move up. And I can't stress this enough. This is not the place to enter the trade, okay? Because the direction is not defined. John, is that you?
Yeah.
I was just about to take off, so I'm glad you popped back in.
Okay. Yeah. There's a couple of other things that were going on today. The grains are picking up again. Probably, remember I mentioned the wheat. The wheat was super strong. It's continuing to be strong. The oats have pulled back a little bit, but that's normal. You know, the oats goes up, and then a few days later, the grains kind of pick up. The coffee has been suddenly come to life. I actually think the coffee might have bottomed. You might want to pull up the coffee chart.
Here's soybeans. Put them on daily.
Yeah, look at the beans. I mean, it looked pretty good there.
Let me pull them up. I'm going to pull them up on the chart where I can bring up, let's see. I want to be able to bring up oats and all of those. So let's go here. Soybeans. Okay. So we'll look at soybeans first. Then we'll go to the wheat. So
Well,
a gap higher open.
right?
Yeah, this is daily chart.
So you're going to have a very strong week. Maybe look at the weekly. So China must be finally buying or something. Yeah, look at that.
Mm-hmm. Yeah, we've taken out these highs right here.
Yeah. Have a look at the wheat.
There's wheat, looking strong.
Yeah, it sure is. Sure is.
What's corn doing?
This deal with China is a very big deal. It's finally, the market's finally waking up to it. Corn is a different ball game. It's not something up with the corn.
Yeah, our trader Ryan sent a short video yesterday. Let me see. I think I got it right here. Yeah, I do. They're harvesting. Harvest time in Ohio.
Yeah, they were showing it on video yesterday.
So sorry. One just found here one. So.
Yeah. A lot of work. Farmers, backbone of America. What do you want to see now? Coffee. All right, let's find coffee. There you go. It's an end of day. Oh no, that's end of day yesterday.
The metals, the gold, just sort of marking time here, but it's the sort of thing that if it decides to go, I'm not sure if that consolidation has got more to do, more work to do.
Yeah, possibly. We're back up to the top of that channel.
Yeah, yeah. And the gold stocks are kind of acting a bit sluggish too, you know, but that could change very fast if you know, the dollar, let's check the dollar before the, yeah, it's going well. But again, is that it, or is there a little bit more work to do? Maybe another test before this thing finally decides to bottom. Yeah, Newmont looks very, very good. I mean, obviously, if we clear the 39 area, it could really move the needle on that thing. I think Newmont's got tremendous potential. Look at this dollar.
Mm-hmm.
Yeah. I mean, that's a really, really big down week.
If this isn't support, and we could drop considerably from here.
Yeah. How's the week looking now? Okay.
There you go.
Good. It's probably it might gap down next week.
Yeah, we could see 96 on this move.
Yeah. If it gaps down, could be it. Could be it. Because really, you know, we're at the same price we were at the beginning of the year almost, or we late last year right now. Haven't gone anywhere. So if we start extending to the downside, you know, before too long you'll be making new 52-week lows. And that really will signal a sea change in the whole dollar setup, you know.
Mm-hmm.
And at some point, you know, maybe we get a gap Sunday night. Something happens, and that could be the differentiator with the gold, with the metals. And actually, the way the metals are poised right now, Monday could be a kind of a gap and go type day. You know, they could, because I think if the gold stocks gap and the metals gap, they will move. And incidentally, could you take a look at platinum? Because I think the platinum is looking better too.
No, wrong platinum. There we go. There's platinum. That's a weekly. And there's a daily.
Yeah, the daily, you know, stranger things that happen. I mean, look at the last time, you know, it was kind of going sideways, then just took off. Could be something similar. Maybe it's still got a little bit more work to do, but it kind of feels like, I think if the platinum does turn up from here, it'll be a very big deal, you know, because it looks kind of bearish at the moment, and maybe some people are shorting it. They get caught short, and there could be a big short squeeze. Actually, it's probably a good idea to have a look at the cotton too, Dwayne.
There you go.
Yeah, it kind of looks like that's bottomed. You can put up the weekly. I think it'll give you a better sense of.
Now let's see if we have any news Sunday night out of China. Sunday night. The People's Bank of China interest rate decision. That comes at 9:30 p.m. Eastern, Sunday night. And then on Monday, what do we have here in the U.S.? We have nothing. Is this
The pound.
Is this some kind of a holiday on Monday?
Yeah, the pound, Dwayne, let's look at the pound. It's just pushing 130 now. Don't forget they got this parliamentary vote tomorrow.
Is there some kind of a holiday on Monday that I'm not aware of?
Don't know.
There's no news. None. All right, which one did you say, John? What do you want to look at?
The pound.
The pound? Okay.
The other way around.
Here, I'll just go. There you go.
Yeah, this is a huge week, and I think can you put the week up? See how that looks.
That is weekly.
Oh, sorry, is it right? Well, it's an expanding range. It's almost guaranteed to go higher this pound next week, especially if that vote comes off. You know, this thing could spike right up to 135. So you could have a gap. You could potentially have a gap down in the dollar and a gap up in the pound. I mean, remember those two little feet we talked about down at the bottom a while back? I mean, this is a really, you know, when you get a really good bottom like that, it tends to go a long way. And we've got a developing very good bottom on the euro, the Swiss, you know, their Swiss is almost up to 102 now. Hasn't been there for a while. And so the whole sector is definitely turning up. Even the Aussie and the Canadian. So we may be witnessing the beginning of a very big move in the currencies. finally. And look at the pound. Looks pretty dynamic. It's kind of a huge double bottom. There's a 2-year double bottom.
Yep.
2.5-year double bottom. That's a pretty big deal. And didn't, unlike the previous one, didn't spend much time this time testing it. So this kind of projects, dare I say it, probably 170 at some point in the future on the pound.
Yeah, it's got a few obstacles to get through, but it certainly could happen.
Yeah, it's done it. The pound's a very elastic kind of a currency.
And if it doesn't move on the current,
how much history you've got there, but you'll see, right after the Soros thing in the 90s, when the pound got slaughtered, it hit 120 the first time, went right back up to 2, and it looks like we may remember we're in a dollar down cycle now, so currencies are overdue for a big rally, and this one looks super dynamic here right now. It looks ultra dynamic. Can you bring a bit more history?
Sure.
Yeah, we see where the pound, look at where it came from. That was just in 2001 up to 2007. It got up to 2100, 2.1. So it's definitely got a pretty good chart now. All that history has been negative, but this bottom could be a game changer for the pound. And with Boris going on the way he's going on, about the pound being free to do all these trade deals around the world, and knowing what Britain has managed to accomplish in the past, you might not want to sell them short. They might be surprising. The gold stocks are picking up here. Royal Gold in particular is the strongest today. It's acting real well.
S&P cash index turned positive. That's for the week.
Yeah.
It's positive for the week. Let me look at it on a daily.
Still, in spite of the day's pullback, it's still got that pretty dynamic looking bottom.
Yeah. Yeah. If we close here or higher, that will bode positive for the Sunday night Globex Open.
Yeah.
These all-time historic highs overhead. Now, this little double top right here on the daily chart, that may be difficult to get through. So let's see. We didn't put in a new high here, and then we failed to do it again here. So if we make it back up again a third time, if we fail a third time, then we may not see a new all-time high anytime soon. Remember, last December was the worst December since 1932.
Yeah, the odds
on December's door again.
The odds of us actually rallying here fairly high, opposite of last year. So as I said yesterday, I think even after today, we're still sort of going back up again. If we don't get any further and roll over, it may change everything much more negative. But the whole picture doesn't look too bad right now. It's in spite of all the things going on.
This was the all-time historic high that was put in last October.
Yeah.
And it led to this. And so here we are in October again.
It's kind of different this time. We're building value at higher levels, and that's a pretty big deal.
Oh yeah, and we've had some real wide-ranging consolidation up in this area.
Yeah.
Unlike this.
And if we do start hitting new highs, it's really going to be. It's probably going to be a continuation. It's going to be new highs are going to beget new highs, especially after today. If we come back from today's pullback and just sort of ignore it, kind of like the Chinese coming in worse. That's part of the reason why the market's down. I think the Chinese situation. But if we kind of brush this off and we're kind of back on track next week, it's definitely going to be. It's probably going to mean that we're going to finish the month pretty well. So, well, listen, have a great afternoon and
John,
a great weekend. And thanks for your help. All the best.
Right. Thank you so much. We'll talk to you Monday.
Okay.
All right. All right, guys, here we are, printing a red candle right at the weekly trading zone. That's what we anticipated. It was the high probability thing. Doesn't mean we're fortune tellers or clairvoyant or any of that spooky stuff. It just means we know what the next high probability move is. Any market, any time frame. No guarantee it'll happen, but we do know, and we can teach you to know what the next high probability move is. If you think that would help you and your trading, get a hold of Valerie, 949-42-EMINI, or send her an email, support@cfrn.net. She'll send you out a spec sheet, a price sheet, and hey, come to Globex Open Sunday night, you could be right there in the Telegram channel, shoulder to shoulder, trading right along with us. Love to see you there. It is the weekend. CFRN charter dictates you must spend some quality time with the family. Of course, I'll see you in church on Sunday. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.